Hey market friends! Welcome back to Will of the Market. Today, we're stepping into the world of autonomous robots and delivery, focusing on SERV Robotics, ticker SERV. We'll cover what they build, how they compare, what's happening with the stock lately, and how the market feels about them. Think robot meets Silicon Valley. Let's roll. Part 1. What SERV Robotics does. SERV Robotics specializes in autonomous delivery robots, sidewalk robots that navigate public spaces to deliver food and small goods. They design, build, and operate zero-emissions, self-driving delivery robots for last-mile use. They were spun off from Uber, Postmates lineage, and now have partnerships to deploy these robots through platforms like Uber Eats and merchants like 7-Eleven and Shake Shack. SERV has made expansion moves, opening operations in more cities, e.g. they're pushing growth in Los Angeles, Miami, Dallas, launching robot fleets, and investing in autonomy tech. For example, they acquired Phantom Auto to add teleoperation, ultra-low latency remote control tech to their Level 4 autonomy stack. They also tie up with drone companies, Alphabet's Wing, to extend delivery reach. Their robots take food to drone, handoff, points, then drones complete the leg. That hybrid model could boost range in more spread-out environments. In short, SERV is trying to be not just a robot builder, but a last-mile delivery ecosystem combining sidewalk robots, drones, software, and operations. Part 2, Peers and Competitive Landscape. Who are SERV's rivals, and where does it stand out or lag? Peers, comparators. Other autonomous delivery, robotics firms, e.g. Starship Technologies, Neuro, Agility Robotics. Drone delivery companies, Wing, Zipline, in overlapping territory. Logistics and delivery giants, Amazon, DoorDash, trying internal autonomous systems. Infrastructure, autonomy platforms providing robotics software. Strengths and competitive advantages. Early mover on sidewalk autonomy. Operating in dense city environments, where GPS, drone-only solutions struggle. Partnerships with big names, Uber Eats, 7-Eleven, etc., give real-world deployment access. Growing tech footprint, acquisitions of autonomy, teleoperation tech to strengthen control layers. Environmental narrative, zero emissions, sustainable last-mile delivery. Challenges, risks. Execution complexity. Navigating sidewalks full of obstacles, pedestrians, regulatory rules. Safety and public perception. Robots must be incredibly reliable or accidents will create backlash. Capital intensive. Hardware, operations, R&D are expensive. Competition. Drones, autonomous vehicles, or other robotics firms might leapfrog them. Regulatory, liability. Who's responsible if a robot hits someone or causes damage? Part 3, Recent price action and key developments. Let's get to the charts and headlines. In the past 3 months, SERV stock surged approximately 97%, far outpacing its industry peers. The stock has gotten stronger technical signaling. For instance, it achieved a relative strength, RS, rating of 83. Which is significant because stocks above 80 are often seen as early leaders. However, recent breakout attempts have stumbled. It recently broke above its 21-day moving average but fell back below. On fundamentals, in recent earnings, the company reported EPS of -36 cents, i.e. a loss, missing estimates. But revenue growth was positive, e.g. 36% increase in recent periods. In Q1 2025, they reported $440,000 in revenue, on small base, up approximately 150% over prior quarter. Analysts are bullish. Multiple brokerages rate SERV as a buy, or strong buy, with 12-month targets ranging $17.00 $18.75. Institutional interest exists. EG Exchange Traded Concepts LLC holds $11.4 million in SERV, approximately 1.75% stake. Insider activity. The CFO, Brian Reed, recently sold shares, 7,175 shares, worth $74,900. That sale raised eyebrows given the timing. So, SERV is volatile, high growth, with bullish technicals, but still earning negative profits and with insider sales worth watching. Part 4, Investor Sentiment and Risks. What's the crowd saying? The sentiment is cautiously optimistic. Many investors see SERV as a moonshot play on robotics plus autonomous delivery. Some see SERV as undervalued given its tech potential. The momentum is real, but this is not a safe pick. News sentiment metrics are modest. SERV's sentiment is positive but not overly exuberant. Some concern arises from insiders selling shares. As noted, dilution risk. The share count has nearly doubled in past year. Safety, public perception is also a wild card. Recently, a sidewalk robot nearly collided with a man with disabilities, raising concerns about navigation accuracy in public spaces. The company faces a grow or die mentality. Investors expect execution and scale, not just promise. So overall, the mood. Believers are hopeful, cautious watchers are waiting for proof, skeptics have valid concerns. Part 5, Upside and Risks. What could go right, wrong? Let's borrow the Terminator's line. I'll be back. SERV could come roaring back, or run out of fuel. Upside scenarios. They scale deployments fast, 2,000 robot deals through Uber Eats, hitting economies of scale. Tech integrations, teleoperation, autonomy stack, improve reliability, reduce costs. Partnerships, drones, city contracts, expand reach. Positive regulatory support, public acceptance, revenue monetization. Risk scenarios. Safety failures or collisions damage brand and trust. Capital crunch or inability to fund scaling. Revenue growth fails to keep up with costs. Regulatory or liability issues become constraints. Dilution from future financing rounds triggers downward pressure. Conclusion. If SERV Robotics were a character in Blade Runner, it would be the replicant striving to be more human, pushing delivery robots into everyday life. The potential is huge, but the path is risky. My take. SERV is not for risk-averse investors. It's speculative, high volatility, and dependent on execution. But for those who believe in robot delivery, autonomy, and disruption, it's a name worth watching. Start small, manage risk tightly, and watch key signals, safety, deployments, revenue growth, and insider behavior. If you like this, smash that like, subscribe, and drop SERV in the comments if you want a head-to-head. SERV versus Neuro versus Starship versus drone plays. Until next trade, may your gains be strong, and your mistakes small.